We have today Yohay Elam. He is the founder of FXStreet and will be with us in this FXStreet session in Barcelona, talking about euro-dollar. So, well, good afternoon.
Good afternoon, cheers. Great to be here.
Happy to have you in this session. And before the speech, I want to ask you just a few questions about the current market situation. So, well, the Fed seems desperate to start this path of normalization. So how you define this normalization?
Well, in the years before the crisis, we had interest rates normally around 4%, a bit higher, a bit lower, and since 2009 we have zero interest rates. And this has been supportive for the economy, but it has its risks of bubbles. And that's why the Fed is eager to get back to normal interest rates, about zero, at least 2%, 3%.
And if we look to the recent NFP numbers and the correction in stock markets, QA4 becomes a valid theory, doesn't it? Is the market starting to discount another round of quantitative easing, or is it just a remote possibility?
I see that as an extreme option because the Fed explained to everybody, to the markets, that it's going to raise rates. It ended QE, it began talking about interest rate hikes. It wants to get back to normal. So I think that things would need to go really sour. We will need to have a loss of jobs. And for a long time, we really need to have an economic catastrophe for the Fed and the markets to begin talking about quantitative easing number 4.
Let's see what happens. And what if the euro-dollar shoots higher from here? Let's say 1.17. What would be the expected reaction from the ECB?
Well, we know that the European Central Bank does not like a strong exchange rate. This makes European exports less attractive and weighs down on inflation. The ECB is already missing its inflation target. So I think once we have a rise of euro-dollar that's 117, 120, we'll hear the ECB begin talking about more QE, extending it, doing more, expressing worries, basically trying to talk down the value of the euro without having to really act.
Okay. And the last question. What's your euro-dollar forecast for this last quarter?
Well, I hope, well, this is recorded, but anyway, I think it'll fall down to around 107, 108 until the end of the year. I don't think it'll reach parity, and my reasoning is more QE from the ECB and a rate hike, or at least a big hint of a rate hike very, very soon from the Fed. These will push down euro-dollar from its current range to the bottom end of the range.
I will check it down in January.
Okay.
Many thanks, Yohay, for staying with us.
You're most welcome.